What's up, Pippin and Dippin community? We got Hunter Burkett, the Pip Hunter over here, and Jovan Grigson
Well,
here from Pippin and Dippin. And today we wanted to talk to you about something that's really, really important and vital to your trading, especially if you're trading U.S. pairs. And it's the U.S. dollar. I know we'll go in and screen share here and show you examples why, and Hunter and I will talk you through it. But really, more than anything, is keeping your trading plan simple. That is the number one thing. You don't need, you know, I think of like Hunter. You ever seen the movie Tin Cup with Kevin Costner?
mm-mm.
Oh man! For those of you that seen that movie, when the one girl that he falls in love with shows up and she's got like all these braces and all these things, so like her swing will be perfect. So she has like a thing that attaches to her hip. She has like a thing to keep her head straight. She has stuff to keep her legs so they don't spread too far apart. All these crazy like things that well, think of that as like your indicators on your screen and the tools you use for your trading plan. You don't need all of that. You really want to keep it simple. And really, a great way to keep it simple is watch the US dollar. Whatever the US dollar is doing, then you go and look at for setups accordingly. So, Hunter, I miss anything there that you want to add in?
No, man, you hit it on the nail. Even though I haven't seen the movie, so I can't relate, but I understand where you're coming from as far as your screen looking really cloudy. Like simplicity is what he's talking about, and that's a big key in the market is simplicity. You don't want to, you know what I mean. You get into this realm of forex so you can get financially free and enjoy get your time back, right? So you don't want to be stuck here all day looking at something that's going to cloud your mind or make your eyes hurt. So
Yeah. So, Hunter, can you see my DXY chart?
yeah, yeah.
All right. So, for those of you that aren't familiar with this, we're kind of just going to casually talk you through it. But this is the DXY chart. Up here, you see the symbol DXY, dog, X ray, what, yellow?
Yeah.
That's probably the best way to do it. This is the dollar index. It's so you can track it. You can do this on TradingView. And you can see this is the same charting that we use, or that I personally use to do my research. I've got the MACD, I've got the 50 EMA. Some of you, if you're, use market maker theory, you may have, the 5, 13, 50, 200, and 800, and that's fine as well. I just like the 50. I like a nice clean chart. I've got my support and resistance drawn from the 4-hour charts. But what we want to, make sure you're doing here on the dollar is understanding the count, like how many days of rise and fall have you seen with the dollar? And because the dollar and any currency index or commodity for that matter typically will rise or fall in 3 to 5 day increments. And so if you've seen where it's risen or fallen 3 to 5 days, then you can rest assured that it's setting up for a reversal or a new trend or maybe a consolidation period before it sets up for another continuation run. But you can see here in the dollar, we'll just take it back to last week. So this is on the 18th, on Sunday the 18th, when the market reopened. This is the 1-hour chart. And you can see right away the dollar broke below the 50. And then if you look down here on the MACD, you can see that there was also a signal line crossing the MACD, and they were both crossing below the 0 line, which means that's a solid trend and setup. And since we knew we were at this high up here, all right, and it started making lower lows and lower highs, we knew it was definitely setting up for a trend reversal. And sure enough, all of last week, the dollar was down until right at the end of the week. And we'll show you. So we'll show you how this works. So here it is, the dollar going down. So if we're trading US pairs, then we know that we should be taking all the currencies that are paired with the US dollar. We should be taking those. So for example, we'll give you some examples here in a second, but Hunter, anything you want to add here?
Yeah, I want to add, if you guys are trading, like what we teach the market maker method, you can also find, if you're looking for that actual full cycle pattern, you can go as far as, looking at your previous M pattern and then finding from there, count from there, find your M pattern, count how many days it's dropped from there. And then maybe also look at the reversal, which is your W off of your finished cycle and vice versa. And then you can also count how many days of rise and fall has happened. And you can also, especially if you're a trend trader, you don't like to catch reversals, you can get inside of there and really hone in on that part of it as a trend.
Yeah, and so just to kind of give you an example of what he's
To
talking
piggyback
about
on
here.
what you were talking about on the zero line, Joe.
Yeah. Well, and there's the W from the previous setup. So when you have the W, now you've got, you've got 1 day a rise, 2 days a rise, 3 days a rise. All right. Right here, it didn't break the previous day high. It started making a lower low and a lower high. And then it continued on the next day. So we knew right here, as soon as it crossed over on the MACD, we knew it was coming down and going in that direction, at least for, they say as little as 2.5 days. It really just depends. You just watch it. But that was a great thing to remind them of, Hunter, is looking for your M's and W's and then counting from there. Your anchors, if you will, from your peak highs and your peak lows. That's really, really important. And you can see here we were at a peak high. That's when it reversed. All right. So here we are. We had, 1 day a drop, 2 days a drop, 3 days a drop. And then look at, same as over here, we had the M pattern here. All right. Just like Hunter said, we had 3 days a drop, and then we did a trend change here. So we had a higher low, a higher high. So here's our first day, 1 day, and then this wick right here on the next day, that was 2 days. And we're really close to probably seeing it go up for a third day. And then it, we'll be watching to see what it does from there. But sure enough, it's above the baseline on the MACD as well, or the zero line, as some people like to call it, excuse me. So great nugget there, Hunter. I'm glad you brought that up. So let's take a look at, go ahead. No, you go ahead.
Yeah, I was just going to introduct into that. This is just the DXY. So we're finding out the cycle on the dollar, right? So basically what we use this for is pretty much a perk, for us to be able to see what this thing is doing. Now we know if the US dollar is paired with another pair or paired with a pair, then we know exactly what that pair is doing, depending on if it's a base or quote currency, right? So, and that's what he's about to reveal to you.
Well, and that's, you hit it right on the head. And so the correlation here's odd USD. And so this was when market opened the previous week, right here. Okay. And it did a famous fake out, and then it went in the direction. So we had the fake out M on the Sunday opening into Monday and down into Tuesday. And then we actually had the real trend that matches up with the US dollar. So we knew the US dollar was weak. So that means the Aussie dollar was going to be strong, should be strong theoretically. So we had the fake out here down, and then it actually went in the right direction. So here, as soon as it crossed and set up across the 50 and gave us an entry, here we go. We could have got in there and rode it up. When it came back down and retested the 50, we could have looked for another entry. Sure enough, we could have finished it. This was a little choppy in here, so you might not have traded it after this first entry, but there we go. We were trading with the US dollar. Let's look at another Euro USD. So, excuse me, let me get rid of that. Whoop. I got to get rid of my crosshair. Sorry, guys. All right. So here we go back to the 18th. US dollar was weak. So that means the euro technically is what you want to place your money on. And sure enough, look at this rise. And it rose the same 3 days like the US dollar was dropping. The euro USD went up. So there we go. So there was our entry right there across the 50. The MACD was up. Beautiful. When it came down and retested, we could have got another entry here, or we could have got out up here. It's up to you, depending on what you use for your exits. However, you could have stayed in the trade and just got another entry here, but it was a beautiful week. Let's see. and it correlated very, very well. So if you got in right here on this pair and rode it all the way up for the week, that was 150 pips for 3 days of Euro USD right there. So that's a nice weekly setup there. And that's off the 1 hour. You could go down to the 15-minute and probably find even more entries, different entry points along the way. So we're on the 1 hour right now. Let's go ahead and look at GU, one of our favorite pairs to trade, and definitely GU. We come back here to the 18th. We did have an entry here Sunday night, basically my time, going into London session here. We did have a little buy up. You could have got in there. You probably would have gotten, you wouldn't have gotten stopped out, but you would have had to come all the way back down to break even, more than likely. The setup though was right here on the 20th. And sure enough, like I said, the dollar was still weak. This went 200 pips in one day right here. So this is actually about 225 pips, I think. So this was a great trade for GU. And again, we figured this out because we were looking at the US dollar. So really, really important to keep that in mind. Let's go ahead and look at NZD USD. Same thing, the 18th. It did kind of like Odd USD did. It faked us out. It did a M pattern, faked us out, acted like it was going to come down, and then it set up this nice W pattern. As soon as it broke the 50 above, sure enough, this was another great trade for the week. If you just caught it once right there, that would have been fantastic for the week. Let's take a look at USD CAD. USD CAD was a little bit, it didn't really align very well.
USD
Well, I
CAD.
guess it did. It just was ugly. It was choppy.
Yeah, and USD CAD is, CAD is kind of connected with oil. So I mean, USD CAD is kind of like a how would you say it, hit or miss. You know what I'm saying? You got to be watching the dollar, what oil is doing at the same time as what we do to figure out, the things on USD CAD. USD CAD is really, really fundamentally driven on this pair. So, and plus, your USD on this is completely different on this pair, right? So if your US dollar was weak, then you're coming down. So, and it's different than GU, like the pairs that we've been looking at. So, so you got to take that in consideration of when you're looking at the dollar and things like that, especially with this pair. I just wanted to throw that in there because I don't even trade USD CAD. USD CAD is not a friend of mine.
Yeah, and we don't trade it very much because, like Hunter said, there's a lot of moving parts to USD CAD. But if you did trade it, it did go with the US dollar was weak, so CAD would have been pulling it down technically, and it sure enough it did. Here's the ugly M that it made, and when it broke structure in here, somewhere right around in here, this would have been a good entry down.
Mm-hmm.
But see, again, it faked us out a little bit here because the US dollar started to play around. I think it was on the 22nd when the US dollar started going strong. So it's really, this is a hard pair to trade. It's not a hard pair to trade. It's just, it tends to be choppy like this.
Yeah. And all we're doing, guys, is like, we're using the US dollar to our advantage, like I said, a perk. And then we're going to the USD pairs and we're finding the best setup. What looks the best in this market, right? And that's how you're going to also increase your profitability in this market, is when you're finding the best setups and it meets all your requirements, your likelihood of winning more trades is going to be there, right?
Yep. I mean, and look at US UCHF. So the US dollar, the Swiss franc, this is beautiful.
Yeah.
I mean, right out of the gate, huh, Hunter? I mean, we didn't even trade it last week. We weren't even looking at it. But this trade was absolutely fantastic. The market opened here on the 18th on Sunday night, And here in London session, it dropped and it dropped and it dropped. It dropped for 3 days straight. This was a great trade coming down. Let's see how many pips that would have been here. So somewhere you broke in here. Sorry. That was for UCHF to go 100 pips. That is a fantastic trade. It would have been slow. I mean, 100 pips for 3 days are, basically 1 day, 2 days. It's still UCHF that 100 pips is a lot. And the thing
that's the whole cycle.
It caught the whole cycle, which was cool. The other thing is that's really important for you guys to understand is the other reason we like to watch US pairs is they trade the pip value on them is usually stronger too. Where when you start trading other pairs, you might not have that 1-to-1 value. It might be a little less than 1-to-1. Where with US pairs, a lot of times you'll find that it's a little bit better than 1-to-1. So a little bit bigger bang for your buck. The reward is a little bit greater, but you also are risking more as well. So you just got to pay attention to that and set up your risk management accordingly. So really, really cool. This was a nice setup. I saw that last week at the end of the week when I was doing my review, and I'm like, man, I wasn't even watching that. But that was pretty fantastic. Let's look at UJ. UJ is another slow moving pair, and it likes to range a lot. So it's challenging. However, sure enough, here we are on the 18th. It faked us out on into, let's see, this would have been Monday morning right here into Asian session in the afternoon. London, it went up. As soon as it hit that peak high, it dropped. And it did it all in 1 day. So as soon as our entry would have been somewhere probably right around here in this, right after this, at the close of this bearish candle, that's when we got the crossover down on the MACD. And again, that was a pretty nice little setup here. Let's see, UJ, another 100 pips right there. So there's a couple 100 pips and two really slow moving pairs. And this did it all in 1 day, which was actually really nice. You just got to be really patient with the UCHF and USD, JPY, the US dollar to the yen, just because they run a little bit slower. So if you can handle, being patient with them, then you'll be you'll be in great shape. Now, dollar, other than GU, the dollar is like my favorite thing to trade. Or I'm sorry, gold is my favorite thing to trade. And I know Hunter's getting more and more on board with this, but sure enough, US dollar was weak. It was going down, right? So gold, look what it did. It went up all week long. There was multiple entries. There was 3-to-1. You could have been hitting 3-to-1s almost all week long, running 25 to 35 pip stop loss for 75 to 100, 75 to 105 pip win. You could have done that multiple times. And look at this big run on the 19th on Tuesday. It shot all the way up. That was a beautiful trade. Absolutely fantastic. And then it broke and came back down because the dollar got strong. You could have been riding it all the way down too. Lots of great setups in gold. I would highly recommend that you're monitoring gold. It's a little bit more volatile, so you have to really manage your risk. But boy, if you're watching the US dollar, it runs and correlates very well with what the DXY index is doing. So that is about it for me. Hunter, what else do we want to talk about here? I know we wanted to really drive home making sure you're looking at the US dollar.
Yeah, we kind of wanted to keep it short and sweet, simple. You guys get the drift of what we're talking about, on the US dollar. I mean, like I said, it's a perk. You know what I mean? We were taught this, way back in the day, to use this as our advantage, because basically it's a cheat code. Whatever this thing's doing, that's what we should be trading. Not only can you use this to your advantage as a perk, you can scale down your pairs. You don't have to have 10, 15, 20 pairs to make any money in this market. Just like Joe said, I mean, look how many multiple entries you have on gold, and the only thing gold is fighting is US dollar. So you take US dollar in consideration with gold, and you focus on that pair with the amount of pit movement it moves a day. You can really do some damage in this market. So yeah, that's pretty much all I got is, and too, the dollar is the big dog, you know. So what else can you, if you do trade other pairs and crosses and things like that, you know, let's take GU for instance. If the dollar's weak and GU's going up, what's EG doing? You know, it's going down. So, you know, that's when I come in and say that the dollar is the big dog. So you can also find other correlating pairs by just looking at this dollar, right? So, yeah, man, that's pretty much all I got. You handled it very well. And
See, he loves to like give me compliments, you know, because he's trying to respect his elders.
yeah.
But no, guys, we really hope that this helped you, because when we show people this, the light usually clicks on for us. You know, for a good year, everybody's saying whatever the US dollar is doing, then, you know, trade accordingly. And we're like, yeah. And then we had another mentor that we both had that showed us the power of understanding the dollar. When it moves like this, then you know that you can go and trade one way or the other with all the US correlating pairs. So it's
This
really,
is your
really,
fundamental analysis.
it is. It
Yeah,
is.
you know what I mean?
Yep. It's fantastic. So with that, Hunter, if you don't have anything else, man, we will call this video in and get back to pipping and dipping.
Yeah, stay pipping and dipping.
All right, guys, take care.